is shifting from China. Growth speed to risk control. For decades, China's economic story was defined by speed, high growth, rapid urbanization, expanding credit. But today, the priority appears different. Stability and risk control seems to be taking center stage. This shift may be more important than any single data points because how it changes. The entire system allocates capital, opportunities, and expectations. In high-growth phases, economic systems tolerate higher leverage and experimentation. Risk is often accepted because expansion can offset inefficiencies. However, once growth moderates, accumulated risks become more visible. Debt levels, property exposure, demographic pressure, and external trade uncertainty begin to matter more. In that environment, policy emphasis typically shifts from expansion to preservation. Risk control does not necessarily mean economic weakness. It often signals a transition from quantitative growth to qualitative adjustment. But this transition creates trade-offs. When risk control becomes dominant, credit expansion slows, investment decisions becoming more cautious, private sector sentiment may weaken in the short term. The key structural question is whether stability can coexist with renewed productivity growth. If risk control stabilizes the financial systems while enabling industrial upgrading, the economy enters a consolidation phase. If risk control suppresses risk-taking without generating new growth drivers, the system may experience prolonged caution. The outcome depends on three variables. First, whether new sectors, such as advanced manufacturing or AI integration, can generate real productivity gains. Second, whether household confidence stabilizes. Third, whether external conditions remain manageable. The strategic shift from speed to stability is not inherently positive or negative. It represents different phases of development. The real question is whether this phase becomes a foundation for the next growth cycle or a period of extended balance sheet repair.